The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Hope you're doing well this morning. God, this week is flying, huh? And I've got the Obamacare paperwork back here. I just wanted to let you guys know I'm going to save it as a souvenir and tell my grandchildren someday about the horrendous ordeal and got proof of it. Right back there. Just thought I'd put it in the vault. Also, wanted to talk about the dollar really quick. Let's see here. Here's the situation on the daily. And this is something I've really been focusing on because it really affects a lot of other things going on out there that we're going to talk about today, and we have been talking about. And I've talked about let's just wait until we start seeing some cracks here, getting back in the fair auction. This is, it's not like a major dive here, but as we look at this, we had that kind of reversal big bar yesterday, and now we're starting to get back in the fair auction. And I really like this as it affects other things out there in the marketplace, namely gold. So let's take a look at this one. And, Tom and I were talking about, man, it's scary when you really start getting in love with a trade. And gold has been something, that dollar just kind of really clarified the air when it comes to this particular product recently. And, that trade we talked about taking off from 1148 up into 1236 happened. But then you've got to kind of wait and see. And we had a close last week above these 1236's area. Now we're clean and clear of the daily noise too. So we could be in the ether up here now. There's the daily unfair highs on gold right now. And that dollar is kind of telling you that, gold was just waiting for this moment. So if the dollar can kind of, again, stay within this balanced area that we just looked at, I think gold's got a really, really good shot because it's already kind of told the story ahead of time. We've been talking about buying gold again as support is offered after that 1236 was hit, and there's that 1218.5 we talked about the other day. We reached a low of 1217.5. Got to give yourself a little bit of a noise factor there. It happened twice, and then there was a chance to take some weight off again at the weekly unfair highs. It's been a nice little block out the short side type trade and only take long supports and breakouts. And now, man, this could go, and I'm kind of excited about it. So I hope you guys are looking at it the same way. I think it's a pretty low risk trade. Make sure you put your stops in. Gold can do anything, as you guys know if you've traded gold before. But I think now you could safely look at a long-term stretch possibly happening in gold, and now put the stops below 1236 based on your appetite for risk. That's going to be the kind of line in the sand here. And if it stops you out and we get back above, I'm not opposed to getting back in the trade a little bit higher. So that's the situation on gold. The dollar, going back to it, I just want to reiterate the long-term view. If you haven't been watching this show, we had a chance to do a trade and bounce here. I wasn't super excited about staying in this trade very long. And here's what's happening this morning again on the daily. 101.20. That's the big number. The dollar yesterday with that reversal, I think we've got a good chance to continue to slide. Here's the 240s on the dollar, breaking down below that area. Very similar, 101.18, 19.20. That's the drill there. Taking a look at crude, similar, talked about blocking out the short side on this trade too. Here's the long-term weekly. I think it's just held up incredibly well as that dollar had, bounced a little bit off that 99.60 and and actually got up into that 102 area. Pretty big movement. Crude oil just kind of stayed the course. 5506 is the top of the box on the daily. These are all numbers within the scanner. Just want to reiterate, if you have this thing, you're going to see those numbers. Here's gold in particular. There's that number we were just talking about, 1236 rounded off. There's the unfair highs on the daily, 1241. Here's the landscape view. And look at this. This is really what you want to see here. You look at all time frames, you see green across the board on gold, and at bare minimum, listen to this very well, at bare minimum, you're not supposed to be going short here. All right. So blocking out the short side and only looking at this from the long side gives me sanity. That's what these things do for me. Okay. All right, let's get away from this for a second. That's crude. Still looking at blocking out the short side on crude. 5506 is a chance to take some weight off if you're playing this from the long side on any time frame. That's a big number. And a daily close above 5506 is literally going to have people adjusting their positions in crude. Okay? And what does that mean? That means that some people that are playing around the short side and listening to all these fundamental things out there, not paying attention to the technicals, are going to start covering their shorts. VIX, nothing to really talk about there. The S&Ps continue to go up, and I know you're tired of hearing about that. I am. Man, it's difficult to go long up here. But we talked about yesterday, let's just wait and see if we can get something migrating below 2351, 50, 2352, 2350. Just get back below the latest major inflection points on a couple of time frames. And then I think there might be a trading opportunity to trade this back down into 2323. But until that happens, no dice. If you guys got any questions in the dim, please throw them out there. On anything I'm saying, Aussie dollar, something else I've been talking about, just really, really liking this trade. It's obviously not a component of the dollar index. Tom and I were talking about this yesterday afternoon. You can't trade this from the short side either. So we were talking about it's okay to be long, not okay to be short, and busting out above these daily unfair highs. Haven't really, had anything other than compressing up into this area. I think this thing could rally 300 pips in no time. Here's the 60-minute. Here's the 240s. And again, if I go to the scanner, this is where it tells me very quickly. I'm going to go to the Aussie dollar real quick. See that green across the board there? Similar to gold. So I'm going to go to the landscape view. I'm going to look at my profiles, and voila. Clean and clear. Okay to be long, not okay to be short. All right, guys, we'll be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, guys. Welcome back to the show. And I think we're completely honored. Do we have John from Philadelphia on with us?
Boy, the more you say stuff like that, like you're honored, the more I just cringe.
Man,
John, how are
it
you this
is.
morning?
Yeah, I'm great. How are you doing?
Pretty good, thanks. John, when I last spoke to you was somewhere around February 1st and was asking you about new crop Kansas City wheat.
Mm-hmm.
And today I'd like to ask you about something new again. And this time it's new crop soybean futures, and that would be the November contract.
Mm-hmm.
John, I wanted to ask if you can just bring that up just fresh and clear. And it's very specifically the November 2017 contract. This is for the soybeans that will be planted starting April 1st and then harvested after Labor Day. And I'd like to just ask you, when you look at your TAS profiles weekly, daily,
Mm-hmm.
on that contract, if anything jumps out at you for this. I am specifically myself looking for buys, but I'd kind of like to ask you just for fresh eyes as you see it, please.
Mm-hmm. Okay, yeah, I've got it up on the weekly right now. And, you know, a lot of people look at these profiles and they go, well, you know, a lot of these indicators can be painted in retrospect and as if, you know, they were a certain look back then, but they actually weren't. And I wanted to just state plainly that when these profiles become in force, I mean, they actually, if you look at this yellow bar here, it says, okay, we're going to have a new profile, for instance, and then we have a new profile. But that profile actually started trying to appear on this particular bar this particular week. So when they go in force, I mean, you'll see that inflection point. You'll see that inflection point. These aren't kind of painting the tape to make it look good. These were actually inflection points known ahead of time, similar to what's happening with this profile here, this 981.5 up into like 1036 and some change up here. As you can see, they're pretty good inflection points. And when we have a kind of a relatively wide profile, we kind of bring these POCs into play more often. So right now, this POC, which has kind of acted even recently, last couple of weeks, as some inflection point to pay attention to. To answer your question, right now, this 1008, 1009 area, we've obviously come down into this area. So I'm looking at this. If you're looking for kind of blocking out the short side, which sounds like what you're saying, you've got a chance to pick a battle here. We're right in the middle of a profile, right at the kind of the top of the mode of this profile right now, the way we see it. And it's probably not a bad area to try to pick up a chance to catch a bid here. As you know, it always doesn't work out, but it looks to me that we've kind of ramped up here twice. We're kind of having higher lows if you just ignore the profiles altogether, and this higher low now is at that POC. So I kind of like what you're saying. I think that my view on the dollar, my view on the dollar, I don't think it's going to continue to hang around up here. I think we're going sub 100 no matter what, and stay below that sub 100 and probably get down to the 97 area ultimately. So that would bode well for what you're saying too, in that default kind of repricing situation, as you know. So
John,
right now,
let me just share. Thank you for that. Just wanted to interrupt. I'm sorry. When you mentioned foreign exchange, I bring this to your attention. We've talked about this before regarding soybeans, but it's very important to understand and make note of, and that is when you're looking at the foreign currency impacts on this global market and soybeans, do not, I repeat, capitals DONOT, do not look at the dollar index. Look at the dollar versus the Brazilian real. But conceptually, I mean, you're looking at, you mentioned dollar and how dollar might be poised to fall, which might be supportive for soybeans. When you go and take a look at the dollar versus the Brazilian real, it is, I repeat, is falling, which is, at least on the margin, is a supportive factor for beans. But I do remark on soybeans here, going into the growing season, the currency is really secondary. It frankly is how big or small the U.S. crop's going to be, and that will be the factor that dictates where price heads. But that currency item, just wanted to make note of for you.
Okay, let me see if we can pull this up here. We've got it in the
Thank
scanner.
you so much on that weekly TAS profile for that November soybean contract. The idea that right here you're at the point of control at 1010, 1008. That's very helpful. So I appreciate that.
I mean, I like the higher lows in this. I like how it's kind of defended the bottom of the profile anyway, but kept making higher lows up in the weekly profile, and definitely a chance to pick a battle here around, what did I say, 1008? Yeah, 1008, 1009. Good place to play defense on long term.
Yeah, thanks so much. And I would just make a personal request, and that is going forward, I might ask if you remember to just periodically look at that particular November contract. Now is the time, just in advance of the planting season, when following the price action in that particular contract is something very worthwhile I have found in past years. So thanks again, and I appreciate your input.
Yeah, thanks for calling in. Thank you. We're looking at gold. I just love talking to him. Taking a look at gold, and now we may start getting into the ether up here that we've been talking about. Gold's just been kind of moving up. I don't know if this, I think we've got a little ways to go here, put it that way, and getting clean and clear of everything, all the inflection points. We looked at that on the scanner earlier. Going back to the futures section of the scanner and taking a look at gold, green across the board. Here's the landscape view if you didn't catch this earlier, and it's okay to be long, not okay to be short at bare minimum here. So keep that in mind. That's the way I always look at things. Is it okay to be long, not okay to be short, or okay to be short and not okay to be long? It's really that simple. And this grid up here that we've got on the top, these speedometers, odometers on the S&Ps, very similar situation. And we've been talking about trying to get a crack in the armor there below that 2350-150 area in the S&Ps. That hasn't happened. And that reversal back in the profile will be pretty cool for a trading opportunity in the S&Ps. But as you know, there's a lot stacked against being short the S&Ps right now. Let's take a look at silver. Somebody in the den is saying something about silver. Yeah, a similar situation. We had kind of banked above these profiles and went back and retested on silver. I hear the music. We got to get a break. We'll be right back, guys.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. I had a question in the den. I'm assuming about these, this kind of MACD-ish looking thing on the bottom here. This is another indicator called Navigator, and I use this primarily for divergences in the marketplace to try to figure out maybe a little bit more edge, a biased opinion around the profile. So here's copper, the March copper contract, and I actually talked yesterday with Tom about this particular trade because let me see if I can get this to move. we put a stake in the ground up top, new breakout above weekly profiles, and then reverse back down into it, and then we go back and retest that area. I talked about this. This is not looking terribly bad just from that classical standpoint of trading profiles forever. Might not be a bad place for this, a little bit of a short action with stops above here and maybe coming down to this POC in a wide profile around 2.5562. The dollar coming off is not going to help this trade in its repricing effect, but might have a little bit of a trading opportunity. These reversals are pretty powerful when we reverse back into the profile and then retest and back off. So keep that in mind. But the question, I believe, is this navigator. So I use it, so we, price action goes lower, we have lower peaks in navigator, and crossing the zero line is a big deal too. So, we kind of ramped up pretty quickly in this consolidation stage here, got up near the zero line, and crossed above zero for the first time in forever, pretty much, and then traded above profiles here at the same time on our weekly. So I use it primarily for divergence purposes. This is not in the scanner, but there's a way to read these colors like dark red, light red, overextended bars, magenta, and then crossing above the zero line for a major change in momentum of the instrument. But I use it primarily for divergence purposes relative to price action. And I know I've said something about a new build today for the scanner. I'm not going to flash it today because I found a couple of bugs in it that they need to fix. And the question is, how do I get those? We have entire indicator packages. If you just send me an email about that, I'll see if we've got about 10 platforms that we have these on, and I'll be more than happy to get you some information on it. We are splitting out just the profiles on different platforms alone. Forget the other indicators at a really good deal, but we'll talk about that. I'm talking to Tom about integrating that with something right now that we're doing, and we're also going to take and we're going to make a 30-minute breath calculation that updates about every 5 to 10 seconds on its own for S&P day traders. So it won't be this 60-minute, which I think is a really powerful breath indicator relative to profiles. You get all this information here. It'll be we're putting on another server, a very kind of short-term 30-minute breath calculation that you can use profiles and the edge of the internals, which you will never get anywhere else. Nobody's been crazy enough to do that before, to trade S&P. So you can get the tide of the marketplace, as Basil coined it. I just love that phrase. Relative to the internals, and then be able to use the shorter term inflection points. So I'll pull up the S&Ps right now. Be able to use the 60-minute inflection points or all the other ones that we offer to use this to bank trades against relative to the edge of the internals calculations with the breadth. But if you send me an email, you guys are always welcome to send emails about any questions that you have, any of the things that I talk about during the show. Got a nice little move in the 30-year and the 10-year. The 30-year right now is kind of coming up against some resistance on our 240s. I love the 240s. It regulates a lot of long-term trades that I get into. We're up against that 130, let's just call it 152 again right now. But, this is just an outstanding situation, in my opinion. You got the market that has moved up significantly. You've got the notes and the bonds that have just kind of gone sideways at best. And, again, any type of market pullback, if that ever happens, this thing will see 153 and higher, maybe even 156 in a heartbeat, just to complete the entire fair auction up on the 30-year. So not a terribly high-risk trade the way I'm looking at it in that sense. And the dollar's continuing to come off. We're getting breaking down on the 240s. We're getting deeper into the box on the daily there, which is what I was hoping to see. Let's take a look at Tesla. This is another reason I kind of wait patiently. Well, Come on. I need to feed the mouse. It's turning the wheel. All right. So we're having a little problem there. Let's see if we can type it in on another. That's interesting. Yeah, that's the same. Do you guys ever watch The Curse of Oak Island? How many times have those guys said, that's interesting? If that show can succeed, we need to start our own show on the History Channel. That has been like watching paint dry. Woo! But I think they finally, didn't they have a 2-hour special? They finally found something at the bottom of the hole. Anyway, so, but that was interesting. Tesla, this is something, and I'm going to pull up, see where we're at this morning. Ooh, 265.50. Okay. So pre-market, we're trading 265.50. We've been in an uptrend. This is the daily. And, the other day we talked about, you just got to buy support. The thing's still out of control. And talking about taking some off around the unfair highs on the daily if you're buying that. That's why these profiles are so cool to use. But right now we're back down into the unfair lows here at 262.5. It looks like we're trading 265 right now, so getting close there. I'm not so sure you need to be buying this again. I think you just need to wait. That's a nice little trade that was offered there, a new profile appearing, blah, blah, blah. It happened. I think you got to wait and see what happens here now in Tesla. If we get some kind of cracks in the armor on this trade for the first time in a while, we may finally hear a whoosh sound. This thing has ran quite a few shorts out. I don't know what the stats are now. David White probably knows the short interest. That's the deal there. Apple, again, still nothing to be playing around with here. Let somebody else figure out the high print. If we can get a reversal, kind of like the dollar, hopefully this would happen, getting reversed back and getting a stake in the ground below 136.27. Then I think the 134.21 could be seen. But again, I think, this is such a bad risk reward right now to play around with Apple. I think you've got other things to focus on other than this stock. It's kind of done its thing. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi guys, welcome back to the show. Home Depot, we're kind of finishing up with Apple there. Home Depot is still, I still think you've got no reason to take this trade off on the long side. We've been talking about this for a while, getting long this trade, just, long-term move up. No indications that any reversals are happening so far. I want to pull up some financial stocks here. I can type in the symbol right. All right, American Express is something that we've talked about, has kind of been the outperformer of this sector, in a sector that's just completely on fire. There's the long-term weekly. Here's the daily. Had a hint of a situation 4 days ago to where there was a chance to take some off, and right now, major support on this stock will be 77.38, but I think it could be time to take some off on AXP if you've been long. Let's take a look at Boeing. Here's the weekly on Boeing. Good Lord. No new profiles. Here's the daily, just long and strong. Somebody sent me an email about that. Is it time to take some off? I don't see it. I don't see reasons to take anything off of that trade right now. You will be notified when it's time, if you have the scanner. All right. U.S. Steel. This is obviously related to Trump's MO here. 39.14 new support on this. Had a close last week above profiles and sitting. Let me get the right time frame up here for you. Again, a lot of these stocks just aren't backing off, not showing any cracks in the armor on any level. A couple more bank stocks, Bank of America. When you're trading a stock and you start compressing up against, especially recent highs, not to mention the top of the profile, you just start compressing higher lows, boom, and then you get everybody covers on the short side. That's a nice situation. That's very similar, not yet for that November soybean trade that John from Philadelphia was talking about, but kind of higher lows, blocking out the short side on a POC for support again. Not a bad situation he alerted us to, just as he alerted us to that Kansas City wheat trade. Just a sick situation, really good. Sick meaning good in my vocabulary. Citibank, not performing as well as some of the other ones, obviously, but again, I don't think anything to be shorting. You had some short opportunities. But now, back near the highs, I just think you got better things to look at from the short side than that one. But let's take a look at Goldman Sachs. All right, so here's the long-term weekly profiles reversed back in a couple of weeks ago and now trading above profiles. New support on this 247.77. General Electric. All right, so I had talked about this stock, kind of breaking down. We had, talked about a possible buy a couple of months ago, actually, nibbling around that 30.25 area that was broken as the market was continuing to go higher. Not a good sign. Now you're back up to a chance, I think, with a profile that's edged low to a little bit of a trading opportunity around 30.65 on the short side. Not really been performing that well. You've also got new supply coming into the daily there. Johnson & Johnson. Somebody was asking me what to do with this. So it broke stride, broke above profiles. This is kind of a reversal action that happened last week here, 116.38. Well, this is a great short opportunity. You talked about taking off some weight around 112 down here, and I actually tried to short this again as a weak stock around 116.38. That didn't work. And if you look at this now, as these profiles have kind of edged down, this is that kind of reversal action that happened last week on this stock. So this is nothing to be short now as of last week when we broke above profiles. Let's take a look at Amazon, the monopoly that continues. The only way to look at this from the short side is getting a reversal back into below 847.21. Do not try to outthink things here. I think putting some puts on lottery tickets well below might be in order on this one. When it happens, it happens. Coke. Here's the situation on Coca-Cola. We've talked about this kind of as the eternal short right now. So we've got a relatively wide profile. You got a chance to short something around 41.77 on Coke. Might be able to pick $1 up out of this trade, getting it back down to like 40 and some change. I think Tom and I were talking about, what was it? Sorry, let me go back to the scanner here. KMI, let's take a look at that one. This could, we're trading up a little bit this morning, 21.77. I kind of like this stock to explore all the way back down to 20. Kinder Morgan. Here's the situation on the dailies. I think this thing could go a lot lower. 20. You got about $1.50 possibility in this trade. International Paper. All right, so I like how, again, this reversal sucked for longs. That's a pretty strong indication that we're going to see the other side of the profile, and we did. But I like 51.40 now on this stock. I've 51.40 coupled with 51.28. You've got really good support here. It kind of bounced off of that DMZ yesterday. I think International Paper could be bought here as a pretty low risk trade. So keep that one on your radar screen. Where's the targets on this one? 54.68. 54.68. You got a decent little risk reward situation here. Stops below 51.40, 51.28 below that DMZ. Qualcomm. You hope that we can get back up to 58.45 on this, let the market come to you, and then I think you got a shorting opportunity. We'll be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi guys, welcome back to the show. So just to recap here, a couple of things we were saying earlier. Here's the dollar. Starting to really dive back in the box here, 101.20, stops above there. I think anytime you get into that area now, you could short it for a retracement back into 127. Got about 70, 80 pips left in it. Here's the short-term action on the dollar. What is that doing to the rest of the world? Crude, loving that concept. Here's the weekly on crude. Here's the daily, 55.06 is your targets there initially. Gold kind of enjoying that move in the dollar. Just it was waiting for something like that to happen. I mean, I hate to call it an easy setup, but kind of we were licking our lips about this one, Tom and I. And now clean and clear, going to be in the ether here up here, I believe, and just going to see some wild action on gold now. It's really weird how the notes and the bonds are just kind of hanging in there at the same time, though. It's really weird. Silver, we talked about this one earlier. Obviously, getting an move too. Just was waiting for any reason to go to the next level. Here's silver breaking out again above 1808 on the dailies. All right. Get my machine to work here. Shanghai taking a little break here. Got some indications during the trading day. New profile attempting to appear. Might want to just sit tight on this one. Still think we can get to 35.21 on the Shanghai. Take a look at those ETFs that are advertised on TFNN to trade those. Currencies, I want to hit the euro really quick. All right, so not exactly quite in the area I'd like to see it to start nibbling again. I'd love to see it get back above and have at least a daily close above this 105.86. So, been talking about the dollar is probably a better trade on the short side than the euro on the long side. But again, it has a lot of inverse relationships to it without question. But the euro bouncing up now. The yen, I talked about staying away from this on the long side and that spread trade. But again, that dollar coming back off, I think the yen easily can see 112 and even lower. And if we go back and retest 111.68 now on the yen, that's probably going to put some people on the edge of their seat, because remember, that was massive support there. And I think the dollar can come off 100. Let's just restate that. Just restating some numbers on the dollar here. First stop, after we dive into the box, stops above 101.20. You got 120.28 and then 99.63. Those are the big numbers on the dollar as targets on this particular trade. We're going to take a look at July wheat really quick. All right, so July wheat, again, long and strong on the weeklies, but on the dailies, now you've gotten yesterday, you kind of got a close back in the profile, and you had that retest this morning on the long side. Remember, you're kind of blocking out the short side on wheat right now, and now you've got the stake in the ground, close above yesterday, go back and retest 467.25. I think we can ramp up to 484 on this one easily. Decent risk reward trade on that one. We'll be back tomorrow, guys. Thanks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.